we're buying our first foreclosure right now directly from a bank that took back an office building. So we're starting to see those kind of start coming to fruition. I think it's going to be picked up the next 12 months or so. But it's a commercial, this is a commercial real estate issue, and so it's going to be pretty clean and quick. So you got to be ready to capitalize on those. And so we're buying these, everywhere between $40 and $90 a square foot in downtown locations, irreplaceable locations, walk scores of 95 plus typically before we even get there. And so awesome locations. So we're buying them again on the cheap. These guys probably paid $200 to $400 a foot.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we are back with our guest, Kenny Wolfe. You're going to hear him dive back into an asset class today that I've received a lot of questions about. And it's this office to multifamily conversions, right? You see all these office spaces that are either being foreclosed on or just vacant. Man, what can we do with those? I know my business partner, Sam, and I, we've talked many times about it. Can we do something with that? There's got to be some way to use that, right? And to take advantage of this time when the banks own them, right? And just want rid of them. Well, Kenny has done this. He's actually got 12 of these going on as we speak. He's going to dive into many details today around doing just that and converting that office space into multifamily, and is very successfully. So I love diving into some of this. You're going to learn a lot from Kenny today. Well, I hope you listened to yesterday's segment with Kenny, and he dove into some of his experience or getting into the multifamily space and how they've grown so quickly, over $715 million in assets under management right now. But we also talked about them pivoting to different asset classes and how they've grown in that way as well. And he laid out some of those things, even as a passive investor, that you need to know before maybe investing into those asset classes. But we're going to jump back in today into something he has become an expert in as well, which I've heard a lot of questions about, which is all these office spaces that are vacant. What do we do with them? There's got to be a way we can use those, right? Or use that space or convert them to something. And we're going to dive into that today. Kenny, welcome back to the show.
Thanks, Whitney. Appreciate it. Yeah.
Let's do that. Let's just hop right back in. And Kenny, I know I think you mentioned in yesterday's segment that you're doing 12 of these right now, which kind of blows my mind a little bit. It's awesome. I love that. But office conversions, let's talk through that process a little bit. I've heard different people say, "Oh, it's so difficult because the windows aren't in the right spot, or the electrical's not in the right place, or like we can't use these buildings for multifamily or whatever." But talk through the process a little bit of what that looks like to take an office building to multifamily, and why you would even consider it.
Sure. I mean, like you said, there's a whole bunch of vacant space in the B and C class office spaces, especially in downtown locations, really everywhere, but downtown is kind of where we're focused on. The A class is actually interesting. The A class office is actually increasing rents and occupancy right now. So it's really kind of a tale of two cities. But in B class and below, if you're not highly amenitized, if you're not the newest thing on the block, you're really struggling right now. And so that's what kind of we're focused on. We're buying these for pennies on the dollar right now. There's a lot of distress in the office space right now, and you're seeing it now. I mean, we're buying our first foreclosure right now directly from a bank that took back an office building. So we're starting to see those kind of start coming to fruition. I think it's going to be picked up the next 12 months or so. But it's a commercial, this is a commercial real estate issue, and so it's going to be pretty clean and quick. So you got to be ready to capitalize on those. And so we're buying these, everywhere between $40 and $90 a square foot in downtown locations, irreplaceable locations, walk scores of 95 plus typically before we even get there. And so awesome locations. So we're buying them again on the cheap. These guys probably paid $200 to $400 a foot for what we paid, for what we're paying compared to that. So, but it is a big construction site. We consider it development. You have to wear a hard hat on site. So we got the entire floor. You get down to the cement deck pretty much all the way. You're having to redo electric, AC, plumbing. I mean, you get all brand new systems, which I like. It's an A class. It's almost like a ground up. I mean, you're getting brand new systems throughout the building, and then our finish out, we're going for A plus. So quartz countertops, granite countertops, Bosch appliances, those kind of things, those high level finish outs that we're going for, and then we're commanding almost $3 a foot rents, and so those are really interesting deals. You have to know what you're doing, or like we did, hire somebody for our first one that did. So we teamed up with some amazing architects that knew exactly what they're doing, and they've done this many, many times before. Then also teamed up with some national general contractors as well that have done these adaptive reuse projects before as well. So those first couple, we were learning a lot. Now we know what we're doing after 12, in the process. So it's really about plumbing. That's the biggest deal. I mean, everything else is pretty easy to run because you've got, that middle, usually it's a middle core of elevator shafts and all that kind of in the middle of the building. You've got a hallway around, and then you got windows, right? So, but really plumbing is the biggest deal. And it's a lot of core drilling. I mean, you're just coring down all the way. These buildings that we're doing are 17-story buildings, some are 12. Some are 24. So it's a lot of core drilling to get new plumbing in the system. And then we usually have way too many elevators. And so we can use one or two of those as to run our utilities, do a trash chute, those kind of things. So you have to be a little creative because you have to live inside this box. You got a floor plate that you have to live within. And how do you maximize how many units you can put on there and still make it feel roomy and open? And you've got some amazing views. It's just we love these projects. They're downtown, and we're probably all in at the end of the day, maybe $200 to $250 a square foot net. And I say net because they're 8 of our 12 are historic buildings. And so we get a lot of grant money from the federal government, most of the time the state as well, depending on the state. So we get a lot of grant money on that. And so the federal government is, guaranteed you're going to get 20% of your hard construction cost as a grant in year 5, which is amazing. And then the states all vary as well. So like in Texas, they just do an additional 25% from the state of Texas. So 45% of your construction cost, your hard construction costs, are a grant on these historic office buildings in Texas. In Ohio, it's a competition. We won it 2 years ago for a property. We just submitted now to be on the competition now. But if you win, you get an extra $5 million of equity from the state of Ohio to your project, which again is a big deal. And then we're also seeing seller carries too. So there's a lot of there's enough distress where we've had sellers actually 4 times now leave money in the deal, so they don't lose their shirt. They make some money, and then we come in and do with our investor group, come in at a higher ownership percentage, usually about the similar equity amount, but a higher ownership percentage. So we're getting some extra juice for our investors as well.
Incredible, man! Many great items there. I was just taking a bunch of notes. Love that. Yeah, that was great. It sounds like plumbing's the biggest issue, drilling through the concrete and all that, but it can be done, right? I love that we didn't just say, hey, it can't be done. No, we went out and we found architects who know what they're doing and said, hey, how can we make this happen? Even figuring out the grant, man, that's incredible. 45% of the construction costs back.
Oh, it's a huge deal. So we bought this. Yeah. So I'll give you a live deal. So we bought a deal in Dallas in April. We raised $9 million of equity. We're going to get $16 million of grant money guaranteed. So it's fantastic. Yeah. It's just unreal. So our investors are loving these historic office conversions, and we've got more teed up. So we like them too. It's a little bit more work because you have to keep it historical, right? But it's definitely, well worth it for the returns for the investors. It doesn't add that much more per foot.
Yeah. Wow. Well, I'd love to dive in even more. Unfortunately, we gotta move to a few final questions. Or maybe tell me this, about this office conversion. When you are when you're looking for these specific spaces, what are some deal breakers that or there's no way we can do this one, or versus the ones you all have selected?
Sure. So far, the biggest floor plate, so one floor that we're doing right now is 32,000 square feet. So which is a pretty big floor plate. There's 17 stories of that, but 32 square feet on one floor. That one we had to be a little creative on some dead space. So when there's lack of windows in one section or whatever, you got to figure it out. And then you also have to keep in mind fire code as well. So how quickly can folks get to the stairwell, and then also fire, making sure there's a firewall in between. So what we did on that one, we actually created some very nice storage lockers all the way down that hallway. So it broke up that hallway somewhat. So again, for fireproofing, and then solved our problem for the stairwell, and at the same time fixed this dead space. So it's kind of, you have to be that kind of creative throughout the space. I mean, some of our other ones we're doing, if they're bigger floor plates like that, you're having to get creative with the dead space. So some of them are doing like alternating kind of like business kind of lounges on every floor, to a video game room, a movie theater, like that, kind of break it up on those floors like that as well. And then you can have a lot of fun in the basement. So there's these usually have basements, and so you try to put all your utilities down there if you can, your boilers, your whatever you have down there, all that right there. And so that definitely helps with space. But again, it just comes back to, make sure you have got the knowledge from those architects that have done this, especially on the historical stuff, because you got to preserve certain walls, certain finishings to qualify.
Yeah. Or do you see this continuing, this opportunity to convert office to multifamily, or you see maybe it drying up, or more people doing it, or maybe people coming back to the office? What are your thoughts?
I think if you're not at the office now, you're not going to come back. So I feel like everybody knows kind of where they're at now on their physical occupancy. And that's a big thing to talk about too, is office buildings occupancy. Make sure you ask the broker if they're leased, or is it physical occupancy? That's what we want to know, physical occupancy, because those leases are going to eventually burn off, and those are going to be trouble, right? So you want to know that going in. But if you're not back to the office, you're probably not back now. So I feel like everybody knows kind of where the occupancy is. And each city is a little bit different on that as well, and what industry that you're in on the occupancy. But then, so now the owners know, okay, I know my occupancy, I've got debt issues. If I do have them, they're really big right now. And then how do we get out of it?
All right, Kenny, what about some predictions, or any predictions that you have just for the real estate market or economy over the next, 6-12 months, and how that's affecting what you all are doing?
So we're really watching, like everybody, watching the Fed, watching these interest rates. I mean, that's, if they go down 0.5 point next year, I think that's a huge win. I think a lot of folks that are sweating now will survive. But it depends on how long it takes for them to get there, and how proactive people are with their lenders right now. So I'm encouraging all of the newbie syndicators that got into it in 2019, 2020 to start, or maybe even later, start that conversation now with your lender. Lenders lenders don't want these back. So start negotiating now, start talking to them. Hey, this is our plan. This is how we're going to get you guys out. That's what they care about. So if you can start that now and survive to 2025, you'll be fine. But it all just depends on those interest rates and how fast they come down in next year. Everybody's watching with bated breath.
What's your best advice for passive investors right now?
Basically, it's, you can't time the market. I mean, so folks that are just sitting on the sidelines, like, maybe we have a crash next year, maybe we don't. But if you see a good deal that fits your investment criteria and the returns that you need for your portfolio, make sure you jump on it, because it's, everybody wishes they would have bought in 2020. Everybody wishes they would have bought in 2010, right? So don't miss out and sit on the sidelines. If you're gonna try to time the market, you're gonna miss out if you do.
What are some of the most important metrics that you track? Could be personally or professionally.
We do a lot about, obviously, it's occupancy, rent growth, things like that. We track that daily. Seems like up here. And then we also track demographics too. So if we're buying in a new location or a new city, a new state, we dive into the demographics of, with the employers, employment, all those kind of things. Like landlord friendly laws, we got to be careful of those. You're starting to see some of those pop up, or unlandlord, tenant friendly laws, I should say, pop up even in Texas and other places like that. They're being mentioned. So we're watching those pretty closely.
What about any habits that you're disciplined about that have produced success for you?
I love to start my day with a good CrossFit workout. It's very fast, it's intense, and then I'm done in 25 minutes. So that definitely is a big deal for me, a big habit. And then also too, when I hit the house at 5:30, usually every night, 5:30 or 6, my phone goes into a drawer so I can spend time with, we've got 2 kids, some time with the family, and kind of protect that, because folks will try to eat that time up. For sure.
No doubt about it. What's the number one thing that's contributed to your success?
I think it's leaning in. I mean, every time, we've been doing this for 14 years, every time there's some kind of issue in the market, we've always leaned in and kept going. And that's really helped, jump our company up in a big way.
And how do you like to give back?
We do an annual skeet shoot event, charity skeet shoot event. So we host that. It's kind of business to business deal. So we get our vendors down here, do that. Last year, I think we raised 28 grand for Wounded Warrior. So that's a big deal for us. I give to them a lot. And then kind of on the personal side, we work with, there's two charities that my wife and I kind of donate to here with one's a no-kill dog shelter. We're animal people. And then also there's a housing program in McKinney, Texas that we help.
Awesome. Kenny, grateful for your time. Always a pleasure to have you on the show and connect with you. It's been a few years. I think you and I were in a mastermind together probably 4 or 5 years ago. Right. And then, man, I haven't caught up with you much lately. So grateful for your time. You've shared just so much wisdom and advice for us and the listeners through numerous different asset classes over this last couple segments. So grateful for your time. Tell the listeners again how they can get in touch with you and learn more about you.
Sure. Yeah. So we're over social media, Facebook, Instagram. The best way though is to get a hold of us is wolf with an e-investments.com. There's a spot there to drop your email. You'll get on our mail list. You'll get notifications on our YouTube channel that we do educational content once a week on. And then I speak a lot of events around the country. So we'd love to see you guys there in person.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.